Welcome back, ladies and gentlemen. Thank you all for joining me today. If you are interested in what we do here on the channel, I'm a value investor. I really try to look at value, and the whole idea of this channel is to teach you and really just show you what I'm learning. Because again, I'm still new at this, just like probably the rest of you who are watching this video. You probably wouldn't be watching this video or any of the other videos if you knew what you were doing. So the whole idea is for me to teach you what I'm learning and kind of walk through everything and kind of walk through my portfolio and things like that. So today we're going to be going through one of my positions, Meta, and really looking at the earnings that happened for Q2 2022. If that's what you're interested in, make sure to hit the subscribe button, click like on the video, and let's dive right into this. So first things first, we're going to go through the earnings release, then we're going to go through the transcript and kind of what I gauged from the transcript, and obviously not going to go through it line by line. And then there's two pieces of news that I wanted to throw in right at the end. So first things first, the revenue story is starting to slow down. And so you can see that here, we're at 28 billion versus 29 billion last year. That's a negative 1% decrease. So it's getting a little bit scary. It's getting a little bit dicey. There are some reasons for why this is happening, but overall, I think that Mark and the rest of the team at Meta and really a lot of other, digital advertisers are starting to see a lot of pullback in spend, which is not a good sign when your whole business model is reliant on that. But that's why they're trying to transition into metaverse and all that. But we're going to take a look at mostly, the advertising side because that's what really drives their business. Their costs obviously went up 22% year over year, and a lot of that's due to the headcount increase that they have had. And they are going to start slowing down really their headcount in general, not hiring people on and not backfilling a lot of positions unless deemed necessary. So it'll be interesting to see, over the coming quarters what that really will look like in terms of their performance. Now, as far as some of the other highlights, you had some great increases on the users, on the monthly active users, daily active users, as well as the active people and daily active people. You saw some increases here. Nothing crazy. They're at like almost 3 billion people, or 3 billion users. So at some point, you're kind of hitting every single market that you possibly can. But the big piece of it and really why you saw the drop was if you look here, it says ad impressions, price per ad. So in the second quarter of 2022, ad impressions delivered across our family of apps increased by 15% year over year. The average price per ad decreased by 14% year over year. So that decrease in ad price is really what drove a lot of that decrease on the top line. And I think that a big chunk of that too, they'll explain in the transcript from the call that they had, the earnings call. So we're going to go through that in a little bit, but it's definitely something to keep in the back of your mind as we kind of go through everything else, the negative 1% revenue and really what that is. So share repurchases, they bought back about 5 billion of their shares. They still have $24.32 billion worth to buy back. Now, they are going to buy back these shares probably over the next I would imagine the next couple of years. It's a little dicey right now. I don't think that they're going to go out of their way to spend their free cash on, a ton of buybacks, maybe a little bit in the next quarter, but we'll have to definitely see it. 24 billion is about 5% of the current market cap. I believe their market cap's at 457 billion. 457? Yeah, sounds about right. So 457 billion, so give or take, 4 or 5% of their market cap. Their headcount increased. So again, as I mentioned, their headcount increased 32% year over year. That's a lot of what their G&A and R&D and things like that have been going towards. The CFO commentary as far as, what he thinks for the rest of the next quarter. We expect third quarter 2022 total revenue to be in the range of 26 to 28.5 billion. This outlook reflects a continuation of the weak advertising demand environment we experienced throughout the second quarter, which we believe is being driven by broader economic uncertainty. We also anticipate third quarter Reality Labs to be lower than second quarter revenue. And our guidance assumes foreign currency will be approximately 6% headwind to year-over-year total revenue growth in the third quarter based on current exchange rate. So that is actually like one of the big things right now that I've seen with a ton of companies in their earnings is the fact that the foreign exchange is moving so much. It's moving companies because in this they would have had a 3% year-over-year increase, but because of foreign exchange, they actually have a negative 1%, which is kind of crazy if you think about it. So they go on and explain some of the expenses and other outlooks for payments and things like that. Now, one of the big things that they're going to be doing, obviously, Sheryl Sandberg is going to be stepping down. You have the current financial officer will be moving to the chief strategy officer, and then Susan Lee, who is the vice president of finance, will be promoted and serve as the CFO. So that'd be pretty big. There's just a lot of changes that are going to be coming, so the management is really going to come into almost like a full sweep kind of mode, and a lot of people are going to leave, a lot of people are going to come in. So going down to the statements, you can see here kind of in a better view what this all looks like. So year over year, again, for Q3 or for Q2 2022 versus Q1 2022, got some decreases. Total cost is gone up a tiny bit. I say tiny bit, meanwhile it's 22%. Net income almost down half. You have diluted shares and basic shares, or really the EPS is almost down a third from last year, and you can kind of see here it's being reflected on those like 6-month numbers as well. So it'll be interesting to see. You have to think about like what they're comping against, but it is no excuse in terms of what they're trying to do, and I think the fact that they have held up as well as they have when companies like Snapchat are going down the drain, it's pretty big. You can see here their SBC. And then this is really what I wanted to look at. It was their balance sheet. So their cash and cash equivalents, they're still above the $10 billion mark. Total current assets at $55 billion, so close to $11 billion less than last year or last quarter. And then you had total assets $169 billion, and then the total liabilities is 44 billion. So, and you have to think about, I'm going to talk about this later, but they actually are giving a bond sale for, I believe, about $10 billion. So think those liabilities are going to go up about $10 billion along with the assets, probably the cash. They probably mix it into the cash and marketable securities, depending on what they're spending it on. They haven't given too much commentary on those bond sales yet, but just know that there's going to be about 10 billion, give or take, of liabilities that's going to be added onto here. Other than that, the net income. So the net cash provided by operating activities, not down too huge year over year in terms of the quarter. It's up still on the 6-month mark, but again, we'll take a look here. They're spending a ton on this PPE right here. So a lot of it has to do with the fact that they are trying to build these AI computers. It's going to take a lot of, computing power. So they got to do a lot of high spend on this, especially because the graphics cards and other sort of technology that's going into this has been higher year over year by a lot in most cases. So it'll be interesting to see as NVIDIA and as AMD have, a flood of used graphics cards, if we see any sort of price drops that might help here in the short term. The other thing I want to mention is their free cash flow, which is down here. So along with that cash flow statement, you can see their free cash year over year. So because of the net operating activities being offset by the PPE and the financial leases, you have almost half of the free cash flow you had last year. The 6 months is 4 billion less, give or take. So it's going in the wrong direction, but it's definitely something you want to pay attention to, because if they're reinvesting into their business for the long term, that's really what you want to focus on. And then you'll see a little bit more color of that from the management team when we go through the transcript. So just so you can see the segment information, the real breakout, again, a lot of it's being driven by this advertising slowdown that they talked about. So 28 billion versus, or 28.3 billion versus 28.7 billion last year. It's slightly up over the 6 months, but the year over year for the Q2 2022 versus Q1 2020 or Q2 2021 is not looking too hot. Reality Labs is up a tiny bit, but really look at this. I mean, their income from operations, Reality Labs is almost at $3 billion in one quarter, which is kind of crazy. I mean, if you think about last year, they lost $10 billion for 2021. It looks like they're on track for the same exact thing. So, and they are trying to scale back costs, I know that much, but they're going to lose a ton of money on Metaverse. So when you're investing into this, that is a huge risk. It's basically a money hole at this point, because it hasn't produced anything as far as income goes. Maybe in the future it does, but we'll have to see that when it comes. So other than that, let's jump right over to the transcript. So again, we're going to look at the transcript from the earnings call. I'm just going to kind of like go through some of the pieces that I really liked and things that I wanted to highlight. So you kind of see here just things I've highlighted. So we're going to scroll through a lot of it. If you want to read it, go on their website for their investor relations, and you can find the transcript actually there. So one of the things that they talked about was our family apps continue to grow even as we navigate a challenging macro environment. We now reach more than 3.6 billion monthly across our services. The number of people using Facebook daily continues to grow, including in the US, although we saw an expected decline in monthly activities due to internet blocks related to the war in Ukraine. That said, we seem to have entered an economic downturn that will be a broad impact on the digital advertising business. It's always hard to predict how deep or how long these cycles will be, but I'd say the situation seems worse than it did a quarter ago. It's weird seeing how, Mark Zuckerberg seeing, I guess, economic slowdown versus other businesses were like, no, we're good. We're selling, we've never sold this much before. And it's weird seeing just the two opposite dynamics come through. And I do think that advertising and seeing digital advertising, especially something like this, where this is very effective advertising, digital advertising, you kind of get to peer into it. So it'll be interesting to see over the next couple of quarters if we really see any sort of downturn, if we haven't already seen one now. So with that being said, given the continued trends, this is even more focused now than it was a quarter. Our plan is to steadily reduce headcount growth over the next year. Many teams are going to shrink so we can shift energy to other areas. I want to give our leaders the ability to decide within their teams where to double down, where to backfill attrition, where to restructure teams while minimizing thrash to the long-term initiatives. The fact that we hired a lot of people earlier this year means that our reported year-over-year headcount growth will be substantial for the next few quarters, but it should be continued decline over time. So they're trying to slow down the amount of people that they're bringing in because I think they're starting to realize that, hey, maybe we just like over flooded with a ton of software engineers and people that are really highly paid. And they're getting paid through salary and through SBC. So probably not the best thing for your bottom line, but they're focused on the long term. 30% increase year over year is kind of crazy if you think about it, headcount wise. So it'll be interesting to see teams wise how they sort of grow and going in the future what that really will look like. With that being said, right now about 15% of content in a person's Facebook feed and a little bit more than their Instagram feed is recommended by our AI from people, groups, or accounts that you don't follow. We expect these numbers to more than double by the end of next year as our AI finds additional content that people find interesting that increases engagement and the quality of our feeds since we are already efficient monetizing most of these formats. This should increase our business opportunity over that period as well. So that's really interesting. They're trying to focus into Reels now, and obviously TikTok's a huge competition. TikTok's coming after their lunch, their dinner, their house, their everything right now. So, and they can definitely feel that pressure. They're trying to, pivot into Reels. They did that with Stories a couple years ago. They're trying to do it with Reels now, and I think AI will be a huge portion of it, but the problem is that Instagram is viewed as a social platform and Reels is viewed as TikTok is viewed as entertainment. So that's kind of where you're seeing that disparity. Now, next up, Reels engagement is also growing quickly. I shared last quarter that Reels already made up 20% of the time that people spend on Instagram. This quarter, we saw more than 30% increase in the time that people spent engaging with Reels across Facebook and Instagram. AI advances are driving a lot of these improvements, and one example is that we're launching a new AI model for recommendations. We saw a 15% increase in watch time in the Reels video player on Facebook alone, so I think there are many improvements like this that we'll continue to make. As we're building our discovery engine, though, I want to be clear that we're still ultimately a social company focused on helping people connect. One social trend that we're seeing is that instead of people just interacting in the comments in their feeds, most people find interesting content in their feeds and then message that to content to friends and interact there. This creates this flywheel of discovery and then the social connection and inspiring those people to create more content themselves. In Instagram, for example, we see the Reels that makes up more than half the content reshared in messages. So our strategy isn't public versus social content and interaction. It's really about enabling a flywheel that compounds both. So I think that, again, this really goes on that idea that it's very important to him and very important to the team that Reels becomes more popular. And I think that over time, we will start to see that growth and really see what that will end up looking like over time. Because again, they're trying to pivot into this. They're going to put a lot of money into this. And they want to make sure that TikTok does not take anything from them. And also one thing I want to mention too before we go on to Cheryl's comments is that TikTok is banned in a lot of other countries and it's not able to be used, especially countries like India. So if Facebook's the only thing and it's really heavily used in India, they basically have like almost a monopoly on the content, especially if Reels is becoming more of a thing and for Instagram and for Facebook. So that's something you should pay attention to. Now for Sheryl Sandberg, she said, I'd like to focus on Q2 before making some wider observations of the business. Total revenue was $28.8 billion, a decrease of 1% year over year. Forex trends had a significant impact in Q2, in particular the depreciation of the euro relative to the dollar. On a constant currency basis, we would have had 3% revenue growth year over year. Similar to last quarter, we saw solid growth in APAC and other parts of the world outside of North America and Europe, where it's been a challenging environment. So again, that Forex is really becoming an issue for a lot of different companies and a lot of people touched on it. She really harped on kind of the rest of her, spiel on the call. She harped on how important it is to transition and how, they've done it once with stories. They've built out stories. They built the ad platform around stories and how well that did, and how they want to build it into WhatsApp. They want to build it into Reels, and what that will end up looking like. Obviously, Sheryl Sandberg won't be at the company anymore to kind of execute on that. But I think that overall, we'll start seeing a lot more ads getting pushed and things, strategy-wise, that rely on WhatsApp and rely on Reels and things like that as far as ads go. So one of the questions that I wanted to touch on too was by Justin Post from Bank of America. And he said, thanks for taking my questions and the headwinds. You didn't mention TikTok. Are you seeing any dollars or advertisers pull that could be moving over there, maybe for lower CPMs? Any thoughts on competitive headwinds? And then second, just a quick question on guidance. Is there contemplated pressure on quarter revenue in Q3 versus Q2 because of the Reels usage increases? So Sheryl kind of talked on the ROI and what that'll look like, but what I wanted to focus on was Dave Wayner's kind of response to it. Said, and Justin, let me make sure I got that question. I think you're asking about Q3 and just pressure on Q3 because of Reels usage. Mark mentioned that we really excited that the run rate of Reels crossed $1 billion, but it is overall, because engagement is shifting to Reels, is an overall headwind on the business. We haven't specifically quantified that, but there's a headwind on the business as Reels grows. In the long run, we of course believe that it will be a tailwind on revenue, but that's not happening in 2022. We are optimistic that it can be in the long run, but in general, the pressure that we're seeing on Q3 is overwhelmingly a macro one, where we're seeing sort of a broad-based weakness across most of the verticals. And again, one of the things that they talked about and they keep kind of harping on in terms of Reels is that it's cannibalizing other pieces of their business, because Reels doesn't monetize as well currently with the ads the way it's set up. But they're obviously going to get it there, and they're going to get it to where it should. And the thing is, though, is that watch time on Reels is taking away from other parts of the business in terms of Instagram, Facebook, and like stories, posts, anything like that. So, and that's what we're seeing here is a switch from sort of still pictures to videos and people creating videos. People just really recording and posting videos. It doesn't necessarily need to be created like we're doing here on YouTube. But you're seeing a lot of that move now. So on the last point that I want to make on the earnings transcript, and really what I wanted to touch on, was this new sort of push that I don't think I really heard too much about in the last quarter, but I'm starting to hear about it more. So this is Sheryl Sandberg's last question, which is kind of crazy, but she said, click to messaging ads, and I'm right here. Click to messaging ads is one of our fastest growing ad formats. It's already a multi-billion-dollar business for us, growing at double digits. And that's because, again, I think it follows a playbook we've had of building customer engagement that businesses can be part of, having that consumer behavior happen first, and then being able to work with businesses. So messaging is growing hugely quickly everywhere in the world, and we have particularly engaged broad, very well used messaging platforms in many of them. So when you think about consumers using it, we already know it's happening, and then businesses are increasingly using it. And you're right where you've seen a lot of the behavior start in other parts of the world, but we're seeing that behavior start in North America and Europe as well. And I think that we are deep believers that behavior will continue to grow all over the world. So this means that click to messaging ads become the perfect opportunity. They help move people from discovery to a direct relationship with the business in a world where we're trying to do more with less data. They give businesses and consumers a direct connection, so it's much easier to measure ROI, and so we're investing heavily. So overall, quarter-wise, I don't think the numbers were that great. I don't think they were terrible, that's why the company stock didn't go down crazy like Snapchat, but I don't think they did terrible, but I think that there are some things that you need to pay attention to now, especially with the bond being issued. Revenue finally decreased for the first time ever, as well as, you're seeing some scary things come out from other portions of the business. So really quickly, again, I just want to touch on Meta makes a $10 billion jumbo deal. And really what that's going to look like, it's going to be in 4 parts. So the longest portion of the offering of 40-year security yields 1.65 percentage points above treasuries. So wherever treasuries is selling at, just add 1.65 percentage points to that. And then they said after initial discussions of 1.75 to 1.8% was the original, and originally they were talking up to $30 billion. So we'll start to see that in the next quarter, what that all those terms and everything really looks like. So I'm looking forward to seeing what they're planning on doing with that money, because they haven't really announced anything regarding this yet. So I'm curious to see what they do with that. The other thing that I wanted to mention, the FTC actually went back and the FTC is finally going after Meta for something that they've tried to acquire. So they tried to acquire a popular app on their Meta platforms, and really what it is, it's a fitness app. It's called Within Unlimited, and really what it does, it's going to allow them to broach into sort of the fitness part of the metaverse and just VR in general. And the FTC actually overruled, the head of the FTC overruled it, and they're going to try to see if they can block this deal and sue Meta for it. So again, you know, they're in the crosshairs from the FTC and everyone else in the government. So that's going to be hard for them to make acquisitions that aren't related to their business or that are within their business. It's going to have to be something that's way out of left field, and that's not really how they're going to run their company anyways. So in the future, going for acquisitions and things like that might not work. FTC really has had it out for Meta, and for some good reasons in some cases, but I think that that's something you should pay attention to. Now, with that being said, thank you all for joining me today. I hope this was interesting. I'm going to go through the rest of my companies that are in my stock portfolio. If you want to see that, check out the video on my YouTube channel. I went through my portfolio for middle of July, but I'm going to keep doing every month sort of an update on the portfolio and where we're at. Now, I hope you all enjoyed it. Thank you so much. Happy investing. Have a great day.